Hey folks, this is Paul and I'm back with another one of my new videos, Darn Good Advice. And today's Darn Good Advice is talking about managing and understanding your credit score. So let's talk about what your credit scores are, why does it matter, and to whom does it matter? So don't be fooled by any of the hundreds of thousands of dollars that banks do every year in research marketing. They just want you to keep borrowing money. Your credit score has nothing to do with much other than trying to get you to keep spending money you don't have, aka living on borrowed money and creating more debt. That's why people like Dave Ramsey actually has a very strange policy that I don't agree with of having no credit score. So he doesn't talk about maintaining a high credit score. He talks about no credit score, and we'll get into that in a later point of this video. So what is it? Who is it? Who makes it up? What the heck is it monitoring and measuring? There's three credit bureaus: Equifax, Experian, TransUnion, and your credit score is a culmination of 8 different categories, differently weighted. But the most important ones are making sure that you pay your bills on time and how much credit is available to you and how much are you using. So herein lies the big rub. And this is where I start to part ways with our friend Dave Ramsey. One of the things that he advocates for is as you pay off a credit card, he wants you to close the account. Now, he does that because he doesn't want people to be tempted to use available credit and bring themselves back into a debt problem. Understand that's 99% of the people that call his radio show. But if you close down an account after you've paid off the balance, you're taking away that credit line, that line of available credit. And that means that your ratio of available to used credit gets worse when you close your account. The best thing that you can do, pay off your account, take the credit card out of your wallet, stick it in your file cabinet, forget about it, and remember that as long as you use the card once every year or 2 years, they will maintain your account, and that's fine. So what is your credit score and what is it not? Well, really, it is just a measure of how well you repay money that people have loaned to you. It's not a reflection of your financial health. You could have $1 million in the bank, but if you're not paying your bills on time, or if you're using all of the credit that's available to you, you're going to end up with a bad or good credit score, depending on how you comport yourself and handle your finances. But it's really not a measure of your financial health. It's just a measure of how well do you repay, how likely would others be to keep lending you money. So who's looking at your credit report? And this is again where I part ways with Dave Ramsey. If it was only about spending money and incurring monthly interest charges, then I would wholeheartedly back him and his idea of telling these credit unions to go pound sand. The problem is more than just borrowers are looking at your credit score. So obviously anyone lending you money is going to look at your credit score, but people who want to make sure you're going to pay them on a monthly basis will also look at your credit score. Are you overextended? Are you late paying your bills? These are things that someone like a landlord would want to have. And again, I put this developmental loan on there. There are many people, I listen to Dave Ramsey religiously, and mostly I back his teachings. But there are many people who have called his show and said that they followed his advice and they have a no or undeterminable credit score, and now they're not qualifying for loans. So it is a real threat. And if you are a person who has mastered the self-discipline to get yourself completely debt-free, then I don't think it's a stretch at all to expect you to wisely use your credit cards that easily maintains a high credit score. So with a high credit score, there is only goodness. Who else is looking? Employers are looking. So if you're looking for a promotion or you're looking to get hired, or even if you're looking at a job that requires you to have a security clearance, how you handle your money, how deep in debt you may be, whether or not you're paying your bills on time or not, all indicate things about you that may or may not qualify you for a job slash security clearance. And last but not least is this aspect that many people don't know about. Again, it completely slips off the radar of our friend Dave Ramsey. It's called credit-based insurance scoring. Insurance companies will look at your credit score. Now, you may think, what difference does it make how I pay Discover Card or Visa or MasterCard when it comes to paying my auto insurance? Well, the problem is we're in a place where they're going to decide what kind of responsible person you are based on how you handle your debt and your money. So if you have a bad credit score, don't be surprised if when you get your 6 month or 1 year renewal, you're paying as much as 40% more if you have a bad credit score. So for these reasons and more, I'm against Ramsey. I think that you should always work to get a high credit score, and once you have a high credit score, just maintain it. So know your rights when it comes to your credit score. You always have the right to contact the three bureaus once a year from each and get a free credit report, and you can continue to get free credit reports if you are disputing inaccurate or outdated information. And of course, we think you should always monitor and challenge anything that's on your credit report that should not be there. And if you want, just pause the video and read this. So there are some tricks and trappings, because I'm one of those people, and I argue with my wife about this, that I say, hey, I'm outsmarting the credit card companies. I'm getting their 2 to 5% cash back. I pay my card in full every month. I'm winning the game. Most people are not, because the truth is that the banks spend hundreds of thousands of dollars in market research finding ways to get you to spend using credit. But the most important thing is that using a credit card is painless in comparison to actually separating yourself from your cash. If you have to pull the cash out of your wallet, it hurts to make a purchase. With a credit card, it's no big deal. And what the science does show, for those of us who think that we're outsmarting the credit bureau, is that you tend to spend 18% more per transaction when you buy on credit instead of cash. It's just one more round of drinks. It's just one more round of shots. It's just one more appetizer or a dessert when you go out to dinner. And so they get you. So even though you think you're getting cash back and you're not paying interest, you're spending more than you would have if you used cash. And therein lies the tricks and trappings. And remember that if you are, God help you, but I hope you take our lessons and change your ways. But if you are the kind of person that is making minimum payments on your card, please make sure that you are working to eliminate your debt. Making the minimum payment on your card is calculated at keeping you in debt to the credit card company for decades. Look on your credit card statement. There is a very small print box where they show, if you continue to make the minimum payment, how long you'll be in debt. And I took a look at one of my cards and it said 15 years. Insane. I just paid it off and got rid of it. So can you win with credit? Well, the answer is yes, right? Because having a high credit score has only good things there. Just don't fall into the trappings, right? So there is a real value to maintaining high credit. Build on good behavior where it adds to your credit score, which means pay off your credit cards. Don't rack them back up. Watch your available to used ratio. Pay all your bills on time, no matter what's going on in your life. Beware of overspending, because that's where they get you. And remember to monitor and dispute anything happening on your credit report. And if you are challenging transactions, make sure that you stay on that. Continue to get free reports from the credit bureaus, and make sure that anything that's messy gets cleaned up. And if they won't clean it up, then bury the bad amongst the good. If you have a history of not paying on time, start paying on time. If you've got some cards where you're carrying a balance, start paying off some of those cards and letting them sit. Start burying the bad amongst the good. And once you have a high credit score, it's easy to maintain. For example, there's certain things where you will not be able to overpay on a purchase. For example, I use my credit card when I buy gasoline. I get a 10 cents per gallon discount, and it's impossible for me to overbuy because my gas tank only holds so much gas. So there are ways that you can use your card wisely and not fall into the traps and tricks to get you to overspend, even if you think you're outsmarting the credit card company and not paying their interest charges. They're still getting you to spend more. And remember, they get about 3.5% on every transaction. So they win no matter what. So you can win with credit, but it takes some real understanding to make sure that you're not a fool in their game. Beware of their marketing deceptions. So folks, that's some darn good advice coming to you about how to manage your credit scores. Like and subscribe to my channel, and I will see you in the next video.